Welcome to the 11th edition of Analyst Talk, in which Marco Gadola, CEO of the Straumann Group, shares his thoughts and insights with Markus Wieprecht and Markus Gola, both from MainFirst Bank.
Yeah, thank you for having us, Marco, for the Analyst Talk Straumann today. Maybe as a kickoff question, Consensus is looking for double-digit organic sales growth until 2020, which is one of the highest growth expectations in the overall medtech sector. How confident are you that you can match these ambitious expectations?
Yeah, double-digit expectations are obviously challenging because the market is not growing 10%. We are working in a market with roughly 4% growth, top-line growth. And growing double-digitly means, outperformance of more than 2.5 times. However, when looking at our product portfolio of all the opportunities we still have to increase market share, we strongly believe that actually double-digit growth is feasible. Just naming a couple, if you look at our market share in the non-premium segment outside of Brazil, we have below 5% share. And we have a very attractive portfolio. We have several brands which we can actually then customize according to the needs of the relevant markets. If you look at our clear aligner business, the acquisition of ClearCorrect, also there our market share is 2 to 3%, so still negligible. And also the whole CAD/CAM segment, so CAD/CAM equipment, but also CAD/CAM consumables, we have barely started to actually penetrate the market. And then on top of that, we are very excited with the upcoming launch of our BLX implant because also in the premium tapered market, our share is still relatively low.
Recently, accounting policy issues were in the limelight, but we believe that upcoming product launches are much more relevant for shareholders. So, yeah, what kind of potential do you think you have in the fully tapered implant segment?
I guess you are referring to what I mentioned before, the upcoming launch of our premium fully tapered BLX implant. This is actually opening up a market for us of roughly 2 million implants. So we estimate that the premium fully tapered implant market worldwide is around 2 million implants. And we don't have an offering in this segment yet. We believe that, not obviously in year one, but over a period of 3 to 5 years, we should be able to get to 30% market share in that segment, and that means between 500 and 600,000 incremental implants.
One of the key discussion points we face with investors these days is related to your future EBIT margin development. Do you still see potential to improve your EBIT margin noticeably going forward? And if so, what are the main drivers here?
The question obviously is what is noticeably. So yes, we see potential to further improve underlying margins, EBITDA margin, EBITDA margin, but in the mid and longer term also EBIT margin. We will have some pressure on the EBIT margin because of the acquisitions we did over the last couple of years, yielding in higher amortization charges. And we are also in an expansion phase when it comes to bringing our production capacities up to the next level. So we will tendentially have slightly higher depreciation charges than in the past. So the EBIT level to noticeably improve in the short term, so the next couple of years, is difficult. However, we still have a lot of operational leverage in our business. So when you look at the EBITDA margins, there we are very confident that we can actually continuously improve the underlying EBITDA margin.
Given your strong balance sheet and net cash position, as well as strong free cash flow generation, can investors look forward for higher dividend payments in the future?
That's what we actually have done the last years. When actually increasing net profit, we also decided to increase dividends. So that's actually a trend we hope to continue. We are confident, as mentioned before, that we will be able to double-digitly grow, that we are also able to actually improve the underlying margins, which should then lead to improved profits. And as pointed out before, with improved profits, we are committed to also increase the corresponding dividend payouts. On top of that, I also mentioned capital expenditures. We are in a heavy phase of investing into our factories. We will have doubled our production capacity in Curitiba when it comes to manufacturing Neodent parts. And we are also expanding our factory in Switzerland, in Villeret, to add 50% to the existing capacity. And obviously, this will mean quite some capital expenditures and the corresponding cash out.
That concludes this edition of Analyst Talk. Thank you for your interest, and we hope that you will tune in to the next edition later this year. We also invite you to join our first half results presentation on the 14th of August. Until then, goodbye.